In an interview Thursday afternoon, Federal Reserve Chairman Jerome Powell warned of short-lived price spikes once the pandemic subsidies but sought to assuage fears of long-term inflation that have dominated bear market commentary in the new year, insisting the economy is on track for pre-pandemic growth levels and a broad economic recovery by year's end. If inflation were to move up in ways that are unwelcome, we have the tools for that, and we will use them, Powell said, referring to the historically low interest rates the Fed can still raise to dissuade borrowing, thereby lowering spending and prices and as a result, slowing inflation. No one should doubt that in a way, too low inflation is the much more difficult problem to solve, but we are not living that downside case. The U.S. Consumer Price Index, the most widely used measure of domestic inflation, increased 0.4% in December after rising 0.2% in November, the Bureau of Labor Statistics reported Wednesday. Prices have climbed 1.4% over the past 12 months, fairly below the Federal Reserve's longtime annual inflation target of 2%. Rapid inflation and abrupt interest rate hikes that happen quickly and without warning represent the biggest risk to the U.S. stock market this year, Morgan Stanley equity strategists said in a note last week about the longer-term consequences of massive government spending during the pandemic. With global GDP output already back to pre-pandemic levels and the economy not yet even close to fully reopened, we think the risk for more acute price spikes is greater than appreciated, strategist Michael J. Wilson said, noting that Bitcoin's rapid resurgence is one sign markets are already starting to think currencies like the dollar could be in for an unexpected crash that has ripple effects across asset classes. More stimulus could hurt stocks. Here's the indicator to watch before it does. Forbes, here's the biggest risk for the stock market this year. According to Morgan Stanley Experts, Forbes, here's what we know about Biden's massive new stimulus plan. Forbes, elections have consequences. Goldman Sachs makes 6 big predictions for the economy this year. Forbes.